Hello and good morning, ladies and gentlemen. You're with Martin Penev, Chief Account Executive and Trading Analyst, GDMFX. Welcome to today's European session market outlooks. Quite a fuzz yesterday, but then again, let's take it step by step. North American markets first. Yesterday, the Dow Jones 300 points range ended up with a positive of 135 points up. The Nasdaq High-Tech Index 100 points range ended the session with a positive 70 points. Yesterday, US headline retail sales down 0.3% in August versus the projected 0.1 dip. Core retail sales fell 0.1% versus estimated 0.3 gain. Also, we had Philly Fed Manufacturing Index up from 2 points up to 12.8 versus 1.1 forecasted. The initial jobless claims at 260,000 versus 262. And US headline PPI was flat. The core PPI up by 0.1%, which was expected. Empire State Manufacturing Index up from minus 4.2 to minus 2. And industrial production slowed 0.4% versus 0.2 drop. US business inventories was also flat versus estimated 0.1 uptick. The retail sales figures, apparently consumer spending lagged in the month of August. Headline retail sales slipped 0.3% for the month, sharper than the estimated 0.1 decline, while core retail sales fell 0.1% instead of showing the projected 0.3 gain. Components of the report revealed that most retail segments show weaker activity. This, of course, is causing the headline figure to post its first negative reading since March this year. Basically, only restaurants and apparel stores reported gains, supported by back-to-school sales. Even online shopping was down as e-commerce activity saw its first loss since early 2015. Basically, improvements in the US manufacturing were shown as well. The manufacturing industry saw more green shots after the month of downbeat readings. The Philly Fed Manufacturing Index jumped from 2 up to 12.8 points this month, which was pretty much reflecting a much stronger pace of industry growth instead of slipping to the estimated 1.1 figure. Meanwhile, the Empire State Manufacturing Index rose from minus 4.2 to minus 2 in the month of September, indicating a slightly slower pace of industry contraction, but still shy of the consensus at minus 0.9 points. The August PPI report was mixed as the headline figure posted a weaker than expected flat reading versus the projected 0.1 uptick, while the core reading came in line with expectations of 0.1 increase. The fuel prices were down for the month, but other underlying components posted gains despite the stronger dollar, hinting a bit of positive momentum in the price levels. Today, the US will print the CPI reports and the well-anticipated Reuters Michigan Consumer Sentiment Index, which is pretty much going to show us what is the consumer spending power for the next time. Along with the net positions in dollar, gold, and WTI, with the total net tick flow for August, and also the same report for long-term trade for July. Moving to the European markets, yesterday the German DAX 30 150 points range ended with positive correction of 100 points up. The CAC 40 was 20 points up after the session ended. The Central Bank of Switzerland labor rate unchanged as expected. Also sight deposits rate unchanged at minus 0.75 as expected as well. Eurozone final HI CPI year-on-year unchanged at 0.2, and final core year-on-year unchanged at 0.8% as expected. Eurozone trade balance 20 billion euros versus 29.6 expected and 23.0 previous. The SNB monetary policy decision pretty much as expected. The Swiss National Bank maintained its current monetary policy. The target range for a LIBOR rate is therefore still between minus 1.25 and minus 0.25%, with the median target rate of minus 0.75. Meanwhile, the interest rate on sight deposits was maintained at minus 0.75%. The SNB also repeated its promise, or threat, of course, that it would remain active in the foreign exchange market as necessary, because it still believes that the Swissy is still significantly overvalued. Regarding economic outlook, the Swiss Central Bank expects gross domestic product growth to moderate in the second half of the year, partly owing to the temporary weakening of European growth. It still expects the Swiss economy to grow by around 1.5% for all of 2016, though. As for inflation, the SNB maintained its inflation forecast for this year at minus 0.4%. However, it slightly downgraded its inflation forecast for next year and 2018 from plus 0.3 and plus 0.9% respectively to 0.2 and 0.6. Do note that these forecasts assume that the LIBOR rate remains steady at the median target range, so the SNB is apparently not in any hurry to change its monetary policy. We will wait and see the labor cost report for second quarter in the European zone today. Yesterday was pretty much volatile for the UK markets. The FTSE 100 was 82 points up, closed at 6,740 yesterday. The Bank of England interest rate vote 9 versus 0. The asset purchasing facility 435 billion pounds. The key interest rate remains at 0.25%. We also had retail sales year on year, 0.9% better than the expectations. And retail sales month on month, again, better than the expectations, positive reports. Excluding fuel, as well, better than the expectations with 1.1 points. Retail sales excluding fuel month on month, 0.5% better than the expectations. The Bank of England held its key interest rate unchanged at 0.25% and believes that the gross domestic product growth will gradually continue with the possibility of reaching the 2% target next year. Sterling weakened against all of its 16 major pairs, but the move was far from impressive. The MPC has acknowledged the stronger than expected economic data from recent months. However, this data was not significant to the long-term perspective, where the danger of economic fallout after the Brexit are still quite real. Separately, the retail sales sector performed better than the expectations, especially the excluding fuel readings, which came out all in green yesterday. Moving to the commodity sector, yesterday the S&P 500 index hit a range of 38 points. Currently, the feed is somewhere around 2,140 points. The EIA natural gas storage change yesterday, the report showed that the US rose in storage by 62 BTU. That's 1 billion weaker than the expectations. The futures trimmed losses yesterday after data showed that natural gas supplies in the US rose less than the forecasted last week. It's trading at $2.90 at the moment. The range was 10 cents yesterday. Gold prices sank to fresh 2-week lows during North America's session yesterday as investors digested the release of a host of US economic data. Gold had a range of $17 yesterday, down to $1,314 per troy ounce. Oil prices also fell during the evening on worries that the US rig counts would continue to rise and that returning Libyan and Nigerian exports would stoke the global supply. The WTI had $1 range yesterday, down to $43.50. Today, Baker Hughes oil rig count report. Thank you very much for your attention. I wish you a successful trading day. That's all for me. Bye-bye.